Markets have felt choppy with fast moves in and out of lots of investments. So how do you stay invested, generate returns, and still manage the rocky ride? Coming up on Market Moves, we'll break down how using options-based strategies and specifically covered calls can potentially turn market uncertainty into cash flow. So let's dive in. Okay, covered calls sound fancy, but at their core, they're actually straightforward. You hold shares and sell call options against those shares, and in return, you collect an upfront premium from the buyer. That premium is yours to keep, so no matter what happens next, basically you're converting the market's expected volatility into income generated today. Why are covered calls getting more attention right now? Volatility. Volatility has been elevated in recent months, and higher expected volatility may increase the income generated from this strategy. So the very swings that can make portfolios bumpy becomes a source of cash flow for some investors that are potentially using this approach. Now, some investors prefer generating income through, say, dividends, and there are lots of successful dividend strategies. But Global X analysis has found that covered call strategies can deliver higher yields than many traditional dividend portfolios, and at the same time, they can give investors a somewhat smoother ride through uncertain times. Now, there is an important trade-off to understand. In strong bull markets, the calls you sell can cap your upside. You collect the income, but you may not participate in the full rally if stocks surge well above the strike price. In different market environments, covered call strategies may offer an alternative approach to generating income while behaving differently from traditional equity investments. All right, the cool thing about the covered call approach is that because they have become so popular, you don't even have to use options yourself. Global X, for example, manages a lineup of covered call ETFs that track major Canadian and US indices, including the S&P TSX 60 and the S&P 500. They combine solid equity exposure with a disciplined options overlay designed around current market volatility. Again, for investors who want income alongside growth potential, it's a practical way to approach today's environment, and you can learn more at globalx.ca. That's it for this episode of Market Moves. Are covered calls part of your strategy right now? Let us know in the comments, and make sure to subscribe so you don't miss our next investing video.